Liquidity traps, the hidden hand of the market that catches most traders off guard. I'm Wendell, your mentor from Spektrades, and in this video, we're diving deep into how liquidity traps work, why they happen, and how to use them to your advantage to outsmart the competition. Without wasting any time, let's get right into this video. First, let's get into the psychology of money. Smart money versus retail thinking. Retail traders rely on textbook patterns like support and resistance and breakout setups. Smart money, on the other hand, thrives on manipulating these patterns to grab liquidity. So what exactly are liquidity pools? Liquidity is where retail stops accumulate. They are either above double tops, which is also our buy stops, or below double bottoms, which is our sell stops. The key principle is that the trap happens before the move. Smart money sweeps liquidity to build positions. Example, price fakes a breakout above a key level before reversing sharply. As you can see right here in this chart schematic, price was rallying higher, but we had this previous old high right here. A lot of traders, when price came back down and mitigate this bullish fair value gap right here, they were expecting for price to rally higher and continue this breakout rally. But as you can see, price pushed up higher, cleared this old high right here and grabbed the liquidity, and then reversing sharply faster to come and clear our equal lows right here, our double bottoms, which is one of our liquidity pools. So as you can see, after this liquidity sweep, price pushed down lower, give us a firm body breakup structure of this swing low to then pull back. And on this pullback right here, that's when we position ourselves to enter. We will use this breaker block right here, the last bearish candlestick before price rally higher. Then we're gonna attack opposing pools of liquidity, which is also our equal lows, our double bottoms, just like I stated. Now let's get into the anatomy of a trap. Let's go through our 3 points. So our first point is our retail entry point. Breakout traders enter after a breakout, only to be stopped after a sharp reversal. Support and resistance traders place stops just outside of their zones, which smart money targets. And then the second point is how smart money operates. Smart money seeks liquidity to execute large orders. They use fake moves to grab stops and create momentum for their real direction. And then for the third point is how to spot a trap. First, we have to watch for signs of manipulation. Second is price moves sharply into a liquidity zone. An example is above a double top or below a double bottom. And then the third point is for a quick reversal or wicks rejecting the key level. And then for the last and fourth point to spot a trap is imbalances. We have to check for imbalances left behind after a liquidity sweep. So as we can see here, price came from this and then rallied higher and give us this old high right here. But as you can see, this old low right here had went higher and give us a breakout structure. This right here is a fake rally to trap traders, because the real range is from this old low to this old high right here. So this right here was a fake rally. This was what we call internal range liquidity. This is where price builds a low inside of a range before rallying higher. So as you can see here, price pulled down to mitigate this zone right here, but failed to give us a higher high, a breakup structure of this old swing high. But we can see that price sharply reversed to come and clear this old low right here to tap inside of our real zone to then continuing this trend. So a lot of traders had the correct bias. Price was supposed to go long. You were right? But they weren't noticing the real trend. They didn't understand where to enter and where smart money really moves. So as you can see, smart money won't move until it clears a liquidity pool, either this old low or a old high, or a previous old low or a previous old high. Then we can see that price, after price clears this old low, to then rally higher to come and clear opposing sides of liquidity. Now let's get into protecting yourself as a trader. Right here we have 3 points once again and a bonus tip. The first point is to always trade with the trend. Avoid going against higher time frame structure when traps occur. Use fair value gaps and order blocks to confirm entries after the trap. That's number 1, is to always trade with the trend. Point number 2 is to wait for a confirmation. Avoid trading impulsively during the fake move and look for a retest of the real move origin. As you can see right here, price was accumulating orders and then pushed down lower to come and clear this consolidation low right here. Consolidations are a point of liquidity. So after price clears this old low right here, price then quickly rallies higher to give us a breakup structure of this old high right here. After this breakup structure, all price will do is just come back to mitigate this breaker block right here to then extend higher. So this is our confirmation. After price give us our liquidity sweep, we have to wait for price to rally higher to give us a breakup structure. Then our final point is to set smarter stops. Avoid placing stop losses at obvious liquidity zones. Use structure-based stops tied to smart money logic. So as you can see here, after price clears this liquidity, I would not place my stop loss right here because I would know that this is a consolidation zone. I cannot be trading inside of this zone. I have to wait for price to come and clear the liquidity of this old low and then give me a firm body breaker structure. After this breaker structure right here, I will then position myself nicely to enter at the breaker block high and place my stop loss at the candlestick low, just like you see right here. My stop loss is at the candlestick low. If price push down lower even more to violate this stop loss right here, this trade is a failed trade right here. The setup was beautiful, but this trade is a failed trade. My stop loss is safe below these old lows. So when price comes back and mitigate this breaker block, price will just extend higher to come and clear old highs. And then for the bonus tip is the power of patience. The best traders wait for manipulation to play out before acting. Just like I stated, right? We do not play inside of this consolidation zone. I have to wait first for price to clear this old low and then rallies higher and give me a breaker structure. It's after this move right here, that's when I can position myself nicely to find a good rally to extend higher. Now let's go on the charts and see live examples on how we can trade along smart money. Now that we're on the charts, let's go over this example on how we can play along smart money. As you guys can see right here, just like I stated, the consolidation zones are a point of liquidity. Liquidity is hiding below and above this consolidation zone right here. So the first thing that we have to see is wait for our smart money trap. The smart money trap is the liquidity sweep of these old lows or old highs, because a lot of traders, right, they scale down to the lower time frames and start taking trades inside of this consolidation zone right here. We should never be taking trades inside of consolidation zones, because a lot of traders, newbie traders, they have their stop losses hiding below these old lows right here. So the first thing that we see is that price push down lower and clear this old low right here. And after this liquidity sweep of this old low, we then see that price sharply push higher and giving us a market structure shift of this old high. We can either label it a market structure shift or a change of character. That is perfectly fine. Then we can see that price pulls back and give us short-term liquidity lows right here. Perfect. After every break of structure, always expect for price to give you a short-term low to then rally back higher to then come back and clear that short-term low, mitigate a true zone to then rally back higher. As you can see right here, after this liquidity sweep in this change of character, we are now in a new range from this old low to this old high right here. So let me grab my Gann box from the low to the high. Here, marked in red is our premium zone and marked in green is our discount zone. If we want to buy, we want to see price cross this 50% line, tap inside of our discount zone, and then to rally back higher. Now inside of our discount zones, what can we see? We see that price left us this fair value gap right here. Perfect. And a line inside of this fair value gap is a breaker block right here. So after price mitigate our fair value gap, so what we want to see is for price to come back lower, tap inside of our breaker block and possibly mitigate our fair value gap to then push price higher to come and clear our old highs. So I placed my trade, as you guys can see, right at the fair value gap open, and my stop loss right at the candlestick low right here to be safe. Now let's play price and see exactly what happens. And boom, as you guys can see, price pushed down lower, cleared our internal range lows right here, just like I stated, and then pushed down and tap inside of our fair value gap. The fair value gaps is the magnet of the markets, so you can always expect for price to pull back inside of a fair value gap, mitigate it, and then rally back higher. So if you miss this first entry, you can still catch a second entry by doing the exact same thing. All I'm looking for now is a second breakup structure of a swing high. So we see that price give us a breakup structure of this swing high right here. So what I want to see next is for price to pull back inside of a zone to then rally back higher to come and clear old highs. So what we can expect, we have a fair value gap right here, and aligned with this fair value gap is a breaker block right here, another breaker block. Perfectly. The breaker blocks in the fair value gaps are true powerful zones. They are what we call the unicorn model. I also have a video on that also. So for our second entry marked in orange, we're just going to place our trade right at the breaker block high and our stop loss right at the candlestick low, just like we did before. Now let's play price and see exactly how this trade played out and see if we catch this second entry. And boom, as you guys can see, price pushed down, mitigated my fair value gap in this breaker block right here. But because my stop loss is at the old low, you see that price came down nicely, but it didn't take me out before rallying higher and coming clear this old high right here. If you are also interested in a free trading course in a free trading community, click the first link down below and join the Spark Trading community. Well, this is it. I hope you guys got a lot of value out of this video. If you enjoyed this video, make sure you like, subscribe, and comment down below what you think. This is it. Spektrades out.